Hey Randolph, how are you, buddy? No, yeah, I got new arrows um, yesterday, so I'm fletching them and putting the inserts and all these things in it. I'll tell you what, one thing, man, this little hole in my hand, it ain't gonna stop me. I'm not gonna let that affect me from going after it again. So let's go. Let's go. Let's go. All right. Good morning. Good morning. Good morning. Happy Friday. And it happens to be Friday the 13th. Oh, hooray, hooray. Good morning, everybody. And let's get this party started. Let's take a quick look here at the daily. Give me a second here. Let me get my daily chart back up. Market rallied a little bit, showing some strength. Here we go. All right. So Globex is, hey, good morning, Gary, at that 874. Yeah, it's actually 891. So 891 is Globex, right? So that's going to be a pivotal point for the rest of the day. As long as we continue to trade above that level, the market will have a long bias to it. And we can see how pullbacks are getting handled in this environment. So, quite obvious that the market is under a lot of stress and the rallies are getting shorted into overall, but we're getting at least a minimum of a reversal from yesterday and a continuation of today. That continuation at some point will get challenged at 203. Yeah, Gary, give me a minute here. Let me just finish the morning prep. Okay. So, all right. So let's go over that again. Okay, so 91, the 891 is Globex. The market is reacting very positively toward it. And 196 75, and that's 12,196.75 is going to be a critical level. We need to clear that, then clear 335 in order for the market to really have a solid up momentum. The odds are we will see a two-sided market, and the shorts are going to have uh, a bit of luck pushing the price around, and the longs are going to try to stabilize it. This is an emotional level after an extremely uh, persistent selling pressure. So we should be ready for taking aggressive longs and aggressive shorts once the 200 and the 100 are in sync together. Okay. Now, if we dig in deeper, we will see the fact that the 200 NT Rinko still long, but we are very close to a close, and that price is 116.75. So as long as we continue to trade above that price, and then the 100 NT Rinko reverse to 167, that gives us an opportunity for a long. The minute we go into 116, then that reversal can start a sequence of events of a pullback that can get us to 12,050 and then a retest of the 12,000. So that can be a possibility. And you see how when the price rallies a little bit, then you have that one candle reversal. They test it a couple of times, then you get massive moves lower. So we need to be conscious and careful with that. Okay, so the 116 is a level that you keep an eye on that. All right, 2 minutes to the cash market open. We're looking at ES. I mean, when we talk about NQ, I mean, for all practical reasons, you're talking about ES as well. I mean, a lot of times they're out of sync a little bit, but for the most of the time, you're getting both of them acting in the same direction, to with a little bit of a diversion. Sometimes ES is stronger than NQ. Sometimes NQ is stronger than ES, but ultimately they both kind of work in tandem. And here we're seeing a rotation lower. We see a channel number one that established itself. And actually, we see this formation, consolidation formation, captain setup that failed into a lower price, got tested one more time, and now you are hitting target number three. So target number four is 52, target number five is 42. So you got those are outlier events, and if we get there, the market is going to really get hammered. So, what is the plan for the day? 1 minute to the cash market open. My plan is a very specific one. I'm going to follow the 200 and the 100. I want both to be looking in the same direction in order for me to explore an entry point. Once the 200 and the 100 are in sync, I am looking for a fresh transitional zone to show up. And in that fresh transitional zone, I'm looking for very specific entry points in and around these type of levels, either a trigger trade like you're seeing here, or sometimes you'll get a switch trade, or railroad, or a spear trade. Spear trades are aggressive trades, but ultimately that's what we are looking for. So here comes the market, and let's get it going. And good luck, everybody. Stay disciplined, stay focused, and let's get it done. It's Friday. One more thing, just to kind of wrap up yesterday. Oh, yeah, that's wonderful. Here we go. Trades and periods. So yesterday was the 12th. I had one additional trade. I had one additional trade that was done around the last 15 minutes where the algos are very active. We made 400 and we ended up the day at 1152. So that's an additional trade that I did that was not in the room. Gary, you're going to have to wait, dude. All right. We got the open right now. We got to focus on that. I'll send that email in a minute. So we hit that 16. So the 200 NT Rinko is in sync with the 100 and on the short side. So the market is going to be experiencing a bit of uh, selling pressure here. All right. So wow, look at that. All right. So the objective here is okay. So from 119, 116, we got a switch trade. That was a good one. Hey, good morning, day trader gamer. How are you, buddy? Good morning. Good morning. All right. So what are we doing here? Market is selling off. That was a good entry point at 110, and you're getting 200 and the 100 are in sync. And we moved, what is that? A good 50 points. So no trades for me so far this morning. I'm just gonna be giving myself a little bit of time, that first half an hour, and I'm gonna let the market do whatever it wants to do, And after that first half an hour, we'll start looking for solid entries. I need to get a feel for how the market is behaving here. If we close above 107, which we're about to right now, the market is out of sync. And one thing that I'm noticing just right off the bat in today's or so far this morning price action, things a little bit more orderly than what we have been accustomed to the first half an hour. The past week, a couple of weeks, it's just been a circus. The first half an hour, yeah, I can see a little bit more um, orderly behavior. Good morning, Nolly. Good morning, Gary. Good morning, Randolph. Good morning, Gamer. Let's get this show on the road. Now, if we go, here we go. Look at that, 142, 142. So I'm going to start to look at the long side of things here. I'm going to start looking for a pullback as a buying opportunity. Scratch what I said earlier. The market is going crazy again. So that's the 200 into Rinko that just reversed. So I want to see a pullback here, and I want to start getting involved in that pullback as a buying opportunity. And what I'm going to do is I'm going to look to cut my size initially to 1 and go 200 and go 1, 2. All right. So my objective here is to see a push from 42 to 70.
Order pending. Order filled.
Okay, just one. And stop is 59. Okay, 59. Here we go. I am looking for 70 as a target. So I'm gonna sit here and look for ways to add to that trade. They put a captain setup, which is really good to see. Can we get a 70? That's fine. Do whatever you want to do. Okay, so they're out of sync here, and we need to see a push higher. And or I would be adding to that trade at 100 and
Order pending.
another one at 83.
Order filled. Order pending.
We're still looking for 70.
Order pending. Order
I'm
filled.
taking
Order
one off
canceled.
here. I'm canceling this order
Order
to
canceled.
go. I'm going break even, and I'm looking for 70. So now we are taking risk-free trade, and we're just simply uh, looking for our target. We're close. Target number two on this sequence is 69. Oh yeah, well, do you know what? God dang it. I should have saw that one. Seriously?
Target.
Okay, I'll take it right here. All right. So it really closed. That second candle closed. It closed a little bit under 70, but yeah, I figured that, Gary. Good morning, Pat. How are you? Welcome to the room. Okay, so that trade worked out exactly like it's supposed to, and boom, here comes my 70. I just had to withstand all this junk. So in those two contracts that we did, we made 1700. Well, not 1700. It's we made okay, we made on those two contracts $1,357. And let's just keep working. The big idea was having that 200 and the 100 being in sync. That's what got us involved, and we took the pullbacks in an orderly fashion, with a stop, one here, and and then we looked for our target of 70. We got so darn close to that one, and and actually it did close at that, because it wasn't 70, it was like 69 something. It got close enough, and it pulled back, and in that pullback, I didn't appreciate it, to be honest with you. I was like, all right, well, I cannot just take a break even on a big move like that. So I needed to kind of take a profit. And they put a captain setup short right here. So that was a good spot for me to get out. And then a follow through push. So market is continuing to move higher. I mean, I could be done just right here. I mean, like literally, I could just pack it up and call it a day. Man. So they're putting switch trades right here. The market should be going higher above 200. I got to 200 here and stopped. Let's see. But ultimately, yeah, that's they're pausing it here. So the 200 and the 100 are in sync. They are in sync, and they are pointing to the upside. I'd rather be long than short overall, and the market needs to protect 152. 152. So 25, 25, 25. I mean, that's a 75-point move in the market. Good morning, Sheila. How are you? Good morning. Good morning. You're up 525. Good for you. Good morning, Yanis. How are you? Good morning. Good morning. So what we're seeing here is multiple rotations on the upside. Rotation one, rotation two, and now they are disconnected. They're about to disconnect. Here we go. They disconnected the 200 from the 100. So that's what we are seeing. So on that rotation, on that rotation, so we got a switch trade right here, and that one moved from 94. So I mean it to the 200. So barely made the 5 points. So okay, so if your risk controls are 5 points and go break even, then that trade hit. If not, then you just got caught in that noise before it rallied back up. So just a function of let's do that, Yanis. Absolutely, I'm active on WhatsApp, so let's make a group chat for all of us. I think that'll work. Hey, Brian Stone. Good morning, buddy. All right, let's hyper focus. Hyper focus. We need to hyper focus. The market is rallying. There's a lot of money to be made. Let's go. 203.50. So I took that first trade. Some of you just got here a little bit later. So that long was, man, look at this. Long here, long here. sold here, sold here. We made $1,300. And you got even more push in this market. Yeah, same to you, Brian. It's Friday and it's Friday the 13th. If you're not suspicious, you should be. So they put on a switch trade right here and ran it up a new transitional zone at 12.20. Okay, so they went they went long right here. Okay. So we need to see a pullback, a disconnect of this transitional zone, and a reconnect of it. Once that happen, I'll be engaged more in the on the long side. Right now, the flow of price action is long. The 200 and the 100 are in sync on the long side. So that's the 200, that's the 100, and the price action is definitely a lot more stable and directional today. So we are in a channel, and that channel is on the long side, and that is channel number one. Typically, there's two channels in any move, uh, most of them at least. Our target here is 304.5. Target number three is going to be 492 and a half on a swing trade basis. An outlier event will be 56, 13,056, and 13,432 if we can dream that high. But that is the structure of this market as it stands right now and is subject to change. But that the most imminent target is 304 and a half. So the question that I have for myself is I entered this trade that I just did perfectly here, right here, right? So right when the market flipped, and it went on the long on the 200 into Rinko. So what would have had to happen in order for me to stick around in that trade a little bit longer? I made about 50 points or so. So I got in here, got out there. Then once the market dipped, that last contract did not survive uh, that dip. I ended up getting out. So what I had to do is I would have had to kind of just stay break even and look for the next close, then move my order to the low at 141 and look for the next close, which is at 216, then move to that low of 167 and keep doing that over and over and over till we hit an actual target that I'm looking for, which is 304. So that would have kept me in that one trade from, I don't know where I got in, but it was somewhere around that 30 all the way to 120 points. That one contract would have stayed in for 120 points by adopting that logic. So that's what I would have to do in order to stick around for big moves. I ended up taking the early profit, which is fine. It's a choice, and it's early in the morning. It's not even 9 o'clock. So I expected the market to be a little bit more volatile and non directional. And it turns out that the market was directional. So I just took my money and kind of, the rest is history, right? But you always gotta think, what would I have to do to stay in a trade longer? Because the money is made not by getting in and getting out and getting in and getting out. It's by staying in once you're good, right? All right, they're putting on another trade right here. They're putting on another transitional zone. So an entry is here as a spear at 72. I want to see a bit of a pullback, and then I'll look at an entry if they're so kind to give it to us. We are at target number five, though. I mean, that's just not an exciting place for me to start getting long. Yeah, we're extended. So let me just pass on that idea. I mean, here we go. Yeah, let's pass on that idea. It's just an extended price action. Whenever market gets to between target number four, here we go, 4 and 5, you typically see this type of behavior where the market is just it's backing and filling. Ultimately, the longs need to protect two spots. One of them is 227, and also to protect the 200 NT Rinko, you got to protect 192. So I mean, the question here is, what are we waiting on, right? We are waiting for either the market establishes a new transitional, not a new cloud upward. So then we'll start looking at a potential entry point for an extension of these prices, or the market gets to 228, and that will put me in a position where, here you go. Look at this market. Whoa. Crazy town again. Here comes crazy town. It's 9 o'clock. That's what it is. Okay. 30 point moves in like 2 seconds. So stay away from this kind of market. They shifted here. There was a switch trade right here. Yeah, that was a good one, but market is, let's see here. Captain setup. Yeah, there was some Michigan numbers at the top of the hour. So far, the market is persistent in the long, on the long direction, and 227 is holding. So the potential to hit 300 is higher now with this type of behavior. I mean, here you go. They're putting on a switch trade. Oh man, look at that. That's a good one. Boom. Target number two is hit here. and we're getting very close to target number two on the 200 NT Renko. I mean, here you go. Longs are strong. If the Michigan numbers was bad, well, the market doesn't care. Yeah, don't get cute with this market. Don't try to fade it. Just follow the 200, follow the 100. Just keep it simple. And here comes 300. right, guys. So here we go. A nice little run. We hit that 300, and that was the target that we had early on. Now they put a captain setup long, and they pushed it higher to that 300 again. The market is disconnected a little bit between the longs and between the 200 and the 100, which means that we are pausing for the market to push beyond 305, you know, in order for a continuation trade to garner some strength. Most likely they're going to consolidate this market around here. So why did I say 300? Like, it's not an arbitrary number. It's a Harmony Trading System number. And you will see the market moving from one target to the other as the price is changing hands. So once we did this trigger trade right here, established channel number one, uh, the next logical target is target number two. Then we may get a consolidation. Then, depending on how the consolidation is playing out, target number three can be the next rotation. Cryptocurrencies are stabilizing today, so it may be somewhat of a real relief rally across the board between crypto and indices and stock assets. All of them are recovering today, which is normal. And there was a pretty bad sell pressure that came in. It's just probably the longs need a day. Today may be the day. Gary, what are you asking here? I had one trade today. If that's what you're asking. Made two contract trade, and I'm up 1357. It's Friday the 13th. Jesus Christ. All right, let's stay focused here. So we're seeing an attempt at that 305. The longs are still around here. You could tell. The bid is holding. The pullbacks are not deep. That tells me that the market is strong here. Overall. Now, the longs need to protect 220, and they need to reassert themselves above 305. This kind of consolidation, I'm not interested in, none whatsoever. This is a choppy price action. Maybe you'll get 5 points here and there, but it's an extended price. Yeah, 215 is where we need to see the market. 215. We need to keep the market above 215 for the longs to continue. I mean, look how the choppiness that you're seeing right here. That's one, two, three, four, five, six. 6 candles in a row in a very tight range. All right, we're seeing this little choppy environment that we are in. The market is out of sync between the 200 and the 100. There's nothing for us to do in this environment, very choppy. We'll leave it alone. And we are bumping our head against a whole number, that 12,300, which was a major target that we had. So it's very prudent for us to just kind of sit back and relax and just like let it be here. Let it be. What would get me engaged? Really, we are. I mean, we ran up to that target pretty nicely and good. There was a lot of opportunities on the long side to kind of take advantage of. We took advantage of one of them, and now it's just a matter of giving the market a breather, and let's see if we can get a pullback similar to that pullback that we had earlier on, which is at the open market pulled up 2 to 3 candles, which was decent, then had a one candle reversal, and then a run up. So we could have a pullback that could take us down to the 215 area, and a couple of candles down that could take us to the 150, and then a reversal, and then we'll start going long again. Right here against this big target, I'm not too excited about going long. How is everybody doing? Brian, how are we doing? Sheila, Gary, Yanis, Pat, how are we doing? Noli, any trades? Randolph, how are we doing? Are we taking 525? Okay, that's good. That's good. It's all manageable stuff. Up a little bit, Gary. Okay, good for you. Stop on Yanis. Manageable. Okay, watching. Ah, Lord. Lord, oh mercy. There we go. They're coming. They are coming. Now the longs are back in sync with this move to 305. Pullbacks are buyable again. Well, you made money, Brian. That's 10 points right there. Yeah, yeah, yeah. Oh, yeah. You got to take it up here. We've moved like, what is that? 200, 250 points from the bottom of that move. And we're buying at a breakout level. So you got to get in, get out. This is a scalping environment up at these levels. It's not a buy and hold. But I'm sure the market is going to prove me wrong. There probably will be the biggest rally of the year. But nonetheless, we are at a target, a huge target, target number two. And the longs are still in charge of this price action. We had a disconnect between the 200. Okay, so let me not just say it, to show you what I'm talking about. All right, so the 200 was long. The market on the 100 came in, closed this candle, got disconnected. Spent a lot of time, relatively speaking, just consolidating and churning people up. Then got back in sync at 305, 304. And now off you go to 320. So there's a continuation pattern happening. I mean, if we get up to that 50, you're bumping into the top end of that channel, and there's a good chance that the market will slow down at that point. But so far, we are at an important target, and the market is strong, and there is an appetite for the dips. There's a big appetite for the dips here. All right, good job, Pat, aka Money Drunk. Nice, nice. What made it happen? What trade that got you in? Were you long? Were you short? What happened? I know, I know, I know. It's just the hardest thing about trading is to, I mean, you want to call it hard, but it's when the market is at its highs and you know the trade is to go higher and you're taking that trade. that is a mental challenge. But whatever. You also have to kind of manage your risk. And up here, it's more of a scalping opportunity every 25 points higher. I mean, I've seen markets where they do not relent. It keeps going higher and higher and higher. And every time you think it's about to stop, it's about to turn, it's about to pause, the market just push so ever higher. And this market has been hammered so much that I would not put it past this environment for us to creep up and rip up all the shorts out of the way. It will be, yeah, slow creep. I agree. Well, so that means, Brian, you know how to recognize them very well, right? Yeah, I think that story is gonna stick with me for a lifetime. I keep getting flack from everybody. Well, it's not every day that an arrow goes through your hand, right? So it kind of have to be a memorable. Oh, trust me, it did more than just ache. It did a whole lot more than just ache. But I tell you what, man, I'm blessed that I did not do as much damage as I could have been. It was nothing but a blessing. So not, now I can say whatever doesn't kill you makes you stronger. You know what I learned about that experience? I learned that I can handle. I can perform under pressure because I had literally an arrow stuck in my hand, and I looked at it. I was like, okay, I got to take that out. I mean, I don't want to make people sick here by this conversation, but ultimately, blood all over the place. And I just went through the process of trying to make sure that I don't bleed to death. Yeah. Well, the doctor said, because they did the X-ray and they looked into it and stuff like that. They said you got real lucky. So I take lucky every day. I got lucky. But you could see it in the eyes of the people around me. Everybody freaked out, man. Everybody ran. They ran in all sorts of directions. Nobody would get close to me, and they just gave me the bandages and said, "Okay, you gotta bandage your own self because they don't want to get touched with blood." I thought that was kind of interesting. But again, it's you have to have a presence of mind in times of crisis. So sometimes, and it works in trading more than anything else. Sometimes things in trading don't just necessarily work out exactly the way you planned, and you find yourself in a drawdown. You have two options. Option number one: freak out, run, panic, worry, get anxious, contemplate, ask for help from other people. All these are options that don't necessarily serve you well. Or you could have the presence of mind to say, I expect this to happen. It's part of any trading program or any trading style, no matter what it is. And I have to work through it calmly and efficiently and effectively. And just have the confidence to work through it without injecting too much emotions into it. So the same thing, and then when that arrow hit my hand, I just I almost like my mind went to my trading, and I was like, okay, you, you have a drawdown right now, and that drawdown is in the form of blood out of your body. What are you gonna do? Are you gonna panic, or are you gonna work through it? Here you go. Yeah, thank you, Sheila. Absolutely. Well, they gave me antibiotics. I took half a dosage of it, and I kept everything away from that impact area. So that kept me from contacting any infection, and that is a big thing because it was a 2-inch hole, and the doctors were very concerned that it could be infected. So far it looks like it's. I was supposed to take the stitches out like last week, and I went to take them out, and the doctor looked at me and was like, you're not ready yet. You have not healed completely. Like your hand is not shut. So he was like, okay, come back in another week. uh, all right. So what is the market doing right now? It is still showing higher lows, still showing bids being bought. It's showing transitional zones being built on the upside and market churning upward. Even after hitting that 300 level, we are showing a lot of strength on the upside. The next target in this sequence is 50, 350, and we'll see what the market does there. Well, I'll tell you what, one thing, Brian. I mean, a lot of people was asking me, like, why do you keep messing around with this archery stuff? My answer to that was, what, you want me to sit here and just watch TV all day long? I know. I mean, there is a risk to be out there. There is a risk to being a trader. There's a risk to be anything but somebody who sits in front of TV and watch TV all day long. So when you take those risks, it comes with that risk of being shot in the hand with an arrow or taking a stop loss here and there. But the reward are definitely worth it. Here you go. That's another little push to target number three. And it's a churn. It's a churn upward. So I say go take a risk. Go out in the woods, enjoy nature. I'm a nature guy. Whatever you feel like doing, go out there and do it. Life's too short. One of my things also is photography. I go out there and do a lot of photography. Um, well, okay. I mean, there's some risks and there are some risks. I could go to a war zone to take pictures. Well, that's a higher level risk, right? I mean, you only determine what is suitable to you. But ultimately, just get off the couch, stop watching TV, stop watching the news. It's toxic. And go out there and live a life worth living. That's what brought me to trading, to be honest with you. I just didn't want to work for other people. And I was willing to do whatever I can, whatever I need to do, not to work for other people ever again. Period. And I was willing to do two things: either make it or be homeless under a bridge. There's two options. One of those, one of those are going to happen. Either you go broke and you're living under a bridge, or you make it. I mean, that may be a little bit drastic, but in my head, it was drastic. I was like, okay, I'm willing to do whatever it takes. And here we are, many, many years later. It's always Friday when we get all philosophical and shit. I'm telling you. I don't know why I get philosophical all of a sudden here, but it's a Friday and it's a Friday the 13th. You know, I'm trying to dodge a bullet here. We had a great week, and I'm going to be very particular in what I take as a trade for today. I understand what they're doing, and they're literally are trying to run the shorts out of town. And every dip is getting, the shorts are coming in looking for the turn in the market because in their head they're saying, "Listen, the market has so many bad news. We just had bad news early on with the Michigan numbers, and the market is going to run a little bit and it's going to turn." That's the thought process of people who are going short up here. Okay, I'm not saying they're going to be rewarded or not, but they're thinking in these terms. Now, if the market is really trying to run these type of people out, what would they have to do? They would have to keep doing what they're doing right now. Every little dip in a slow, methodical way, absorb it and run it up just a little bit. And they should do this again and again and again. That will literally, and you know what? You will see them do this all day long. Then at the end of the day, after 3 o'clock Central, drop the market. I've seen it so many times. So mentally, as a trader, you're always thinking not in terms of just price. You're thinking in terms of the participants in this market because you're trading. It's a poker game. It's literally a poker game, and you're trying to figure out what these guys, what kind of hand they're holding. who's weak, who's not, who's getting run over, who's not, who can you make money off of, what type of trader is gonna uh, uh, cover his stops at what level and why. That is the game, and it is a game. But here we go again. We're philosophical today. All right. We're seeing a little bit of a rounding behavior here in price action. So we got very close to that 50 level, and we're getting a little bit of a fading behavior here. So the market will disconnect at 303. So if we hit 303, then the 200 and the 100 are no longer in sync. And that will lead to a bit of back and fill behavior that could take us to the 77 and the 60. Just be careful. I mean, a part of trading is to make assumptions and also make sure that your assumptions may not pan out exactly how you assumed them. So, what are the earliest signs that the market is holding and having a bit of a pullback, a meaningful one, is to have the 100 and the 200 get out of sync. And we're seeing that first part of that. See that 100 NT Rinko just shifted to 303. So the 200 and the 100 are out of sync. And we're trading around that 12,300, which was an important level. All right, look at that. Sneaky. Sneaky. Now, what happened if we break 65? I mean, we're almost there. 65 is the 200 NT Rinko reversing. So that will put us in a position where we have to contemplate actually going short in this market. It's not a contemplation, it's just literally the environment at that point is constructive of a short. And we can take scalping shorts or a swing shorts. Either way, you need to break 65, and we haven't gotten there yet. I mean, we went from almost 250 to 300, about 200 points, 250 points upward, and the market has taken a pause. That's not necessarily an unreasonable thing to see. Got so close. That's amazing, actually. That's so close. 65 was the number, and they got so close to it and pulled back 9:47. So we have about an hour and let's call it hour and 15 minutes. So what happens if we go to 316? If we go to 316, the 200 NT Rinko and the 100 NT Rinko is back in sync on the long side. Now that will put me in a position to start looking for a long. Otherwise, I'm just letting this market either decide to go to 16 or go to 65. And uh, unless I'm hyperactively um, scalping, then I'm just waiting for those two big levels to show up. Because if I'm scalping, what would I be thinking? I would be thinking in terms of the 20 NT Rinko, and I'm saying to myself, okay, I mean, that's actually a beautiful trade right there. Switch trade right here. Market comes back down. You're looking for a transitional zone to show up here in between basically 90 and 80. And then you're looking for an entry point. That would be the scalping mindset. And if I'm swing trade mindset, I'm looking for more of a price above 17 and a price below 65 for the shorts. So they broke the 16. So they put on switch trade, switch trade, switch trade, and ran it up. So that's important to see. So what am I going to be looking for here? I'm looking for a pullback. I need the transitional zone to end, and then a new transitional zone to build, and we will look for an entry point. If I'm aggressive, I mean, there are any pullback here can be buyable, but I'm going to be a little bit more conservative and just look for uh, another behavior that looks exactly like this, but I need the market to pull back to get it done. So markets that do all of this and almost come to a critical level of 65, then they hold the line and reverse it almost in a V recovery fashion. That tells you a lot about the strength that we're seeing in this market today, at least, obviously, right? Well. I mean, they're not. They're just straight up running this price. Okay, they're coming to touch that top end of that range. That 50 is, critical. Ultimately, you get there, you're going to get to the 60, 70 range, and longs are in charge. 200 and the 100 are in sync, and now the transitional zone is out of sync. Okay, so that's good. What does that mean? That means that we are looking for a new transitional zone to build up. How would that look like? See the transitional zone right here, that gray zone? So now that we lost it right here, we're looking to see what the market does in this zone. And ultimately, you want to see the price come to this area, build another transitional zone like this with a signal in the form of a captain setup or a trigger trade, or railroad trades are very lucrative whenever this one candle up, one candle down behavior. Let me clear things up for you here. So you need that type of behavior. Like, okay, so what happened if they go up and close at here? That would be a captain setup. That's a good one right here, but I want to see the price come to that level right here. Okay? Okay, so they're breaking that structure. We want to still see, and that's why we're looking for a confirmation up here. We're looking to see if the market can get up to that 35 level and put on a signal and a new transitional zone. If you look back, the market constantly makes these transitional zones when it's trying to build momentum. Right here, they build it and they fail it, and that's why you need a signal right there to get us in. So like right there is not a signal. You need another run up. That would be a switch trade. That would be a trade to take. So just to build one is not enough. You need to build it and produce a signal. If I get into any trade right here, it would need to be a scalping trade into that 45.50 level. ES, same thing right now. I mean, they're moving in the same way. We need a signal to show up. Right now, the difference between both is NQ already disconnected from the transitional zone while ES is not yet, but it looks like it's about to, especially if they fail to go above 1450 here in the next few minutes. Then you're going to get a push lower and we're going to see a bit of a disconnect. So here we go. And you're seeing that affecting NQ as well. So what do we do with a price structure like that? We just leave it alone. It's not quite fulfilling all our criteria for a trade. I mean, this can literally drop to that 300 and disconnect. So us waiting in this zone for things to get back in sync kept us from excuse me, kept us from getting engaged in this type of behavior because the longs are looking for a continuation trade, but the market is just not like right now, right this moment, the market got disconnected. So let me show you what that means. The 100 NT Rinko just shifted negative, right? So waiting, and that's actually an important thing to see, waiting for the market to re-engage itself and produce a transitional zone, that waiting kept us away from getting sucked into a trade right in this area. And you'll find that that idea by itself is very helpful because it keeps you from consolidated market because consolidated markets do exactly that. You will have momentum through a transitional zone, then once it disconnects you will get yourself that type of behavior. Then they build a transitional zone on the downside, then they'll flip it back up and build another transitional zone on the upside, then they'll do it back and forth, and you never have a second continuation trade. You have one big one to the downside and one to the upside, and you just keep doing that over and over and over. So you know that the market is in consolidation by the behavior of these transitional zones. It's very helpful to keep me from hyperactively trading in an environment that is not constructive for me to trade in. The reason I developed that part of it is because I was always getting sucked into consolidations and getting chopped up. So I had to come up with an idea that will tell me, okay, not yet, not yet, not yet. And I think I'm gonna keep the 200 and the 100 in front of you guys um, this way because I just seem to be keep moving it from my bigger screen to this one, and that is not as effective. So as long as I can do this and go up and see it, then I can come back down and plug that back in. I think that's a better way for all of us to see that information. But we're very close to the high at 41. So we want this and this to be in sync, and the market is got close. If I'm scalping, yeah, because I keep finding myself moving the 200 or like talking about it, and you're not seeing it, and then I pull it back, and so I'm losing a lot of energy just kind of moving around these kind of things, and ultimately they all need to be in one spot where you could glance at everything and just see everything from your perspective. For me, I mean, I could see everything just because of my workstation here, but you're not. But let's see. There we go. 41. So we got the 200 here, we got the 100 here, we got ES here, we got the NT Rinko 20 NT Rinko down there. So what are we doing? What's our objective? What is our next move? Um, my next move mentally is I am selective in this environment. I'm selective at these highs. I'm selective due to the fact that I had a good one trade and I'm up for the day on a Friday. And after having a big week, I wouldn't call it big week. I had a good week. And uh, typically on Thursday and Friday, I tend to, if I look at thousands and thousands of days and trades, typically Friday is a day where I, you know, have a bit of a drawdown. And typically it's just due to the fact that, the wear and tear of being in front of the market for a whole week, especially a volatile market like the one that we're seeing right here. It will take a toll on you, on me as a trader. So that affects the judgment, my judgment. So it's always been my habit on Friday to try to hit it early, make money, or execute good trades and make good decisions and kind of be done with it. So mentally, unless something spectacular shows up in price action at these levels, like a double captain setup, a reversal pattern, something of that sort that I like right now they're about to put a captain setup switch trade right here. That's the scalping opportunity from 330 to 20. That's what that structure is. I need something bigger than just that. And you're getting a captain setup short on ES right now. So that type of behavior can get us to bleed out a little bit into the 20 and potentially the 15. But back to that initial conversation is I'm looking for something spectacular to happen. If it happens, then I will participate. But if it doesn't, I had a good day with one trade. Like I don't have to push it. All right, so that trade right here, one trade on the 13th, we made in with two contracts, made $1,357. So for the week, we had that big day on Monday. Then everything else was like 2 grand, 1 grand. I mean, first, these results are not typical, and second thing, like yesterday, I had a drawdown, a big one that I wore. I mean, I call it big one, but it's not really, relatively speaking. But I had a drawdown, and I had to work myself out of it. The day before that, I think I was down a little bit in the morning, made it back early in the morning on that day. So it seems like that morning volatility gets me, then I work myself out of it. And here, I had a good day. So running at 60%, and actually the average winning versus the losing trades are not, I mean, not that about even, but the fact that I'm running at 60% is making the difference. Anyway, so point is, the point is on a Friday, I'm a bit more selective, and the market had a very decent run up, and we're basically spending a lot of time churning the price action. So what would get me to act if this price comes back down, which highly unlikely, but 267. So we break 267.50, then that will put me in a position where I could start looking for fading this move into a retracement that could take me down to 200. That would be a structure in the market that I would participate in. At these higher levels, I'm going to be very selective about getting long because we moved from target one to target number two, and we're extended and we're showing a bit of back and forth around these levels. So there's a lot of consolidation going on. I mean, it could be a consolidation for higher prices. I know, but I would be taking on a swing trade basis. I would be taking a bigger risk if I'm getting long here. And on a scalping basis, it gives me a little bit more flexibility. So I may take a trade that is decent on the upside in this area. But a better trade is to wait for a 67 close and participate on the short side and watch the market turn into channel number one and start taking the longs back up. That would be a more swing trade based idea. And within that swing trade, I can actually scalp as well. But that's more structured than trying to get long here or trying to get short ahead of a move here. It's just too choppy on a Friday for me to participate. Does that make sense, logic wise? Friday good. Let's see what the. I gotta constantly be. Oh, here you go. You got bit. You got big. Very nice. Very nice. Very nice. Good for you, Gary. Good for you. You must have gotten big on that trade. You must have gotten big. 15 contracts. Yeah, I'll do it. On the long side, could have probably on the long side, right? Yep. Yep. I mean, it was just I I did two contracts. I made what 1,300. You got into 15 contracts. You made 11 grand. It's a scaling thing. So good job. You can right now you can take over the podcast. The you could take the mic and teach us something. me see if I can do something else here, maybe. Because that 50 also is relevant. The only question is, how do I? All right. I think that's a bit more efficient. So now we have the 200 and oops, yeah, that's not gonna work. Okay, here we go. Yeah. So we have the 200, the 100, and the 50. We'll see how that one works. We'll go from there. So basically, the 200 and the 100 are out of sync right now, and the 100 and the 50 are in sync. And now we got multiple things happening in ES that are worthy of us noting. You got a captain set up short up here, and also you got another captain set up on the lower high. And the market is retesting this area. Oh, wow, look at that. So, I mean, if we go up to that level right here at 329, 329, that will be the market being in sync on the long side. I'm liking this already. It's a lot easier to kind of navigate between these charts while I'm talking to you guys. It's not a clear picture just looking at it from here, but I can always do this number and take a look. The ringing bell in the software, basically every time one of these trend statuses change uh, on any of the charts, it will go and dings to tell me that hey, something different changed right now. Okay, so like for example, if this trend status goes from long to short, then boom, that changes, it dings for me. If you have a lot of charts running up, and you're going to hear a whole lot of dinging going on. But you could change it in the software. You could change it. You could put the different kind of dinging. You could customize it to where you could ding for different behaviors. It's just you could put your voice in there if you want to. I tried that once and I was like, oh, okay, yeah, we got to stop this quick. I don't want the software to tell, be my voice and it's telling me, okay, take the damn trade, idiot. Like, I had that voice in there. I was like, no, can't have that right talking to me all day long. All right, so that 30 level, we break it, then the 200 and the 100 are going to be in sync, and there's a high potential of hitting target number two at that point. Here we go, and let's see how far they take it. Target number two is coming up, and that would be a breakout. Actually, that would be a breakout. Oh yeah, they put a captain sub switch trade on the 12 and T Rinko too, so that's coming up right now. Target number two is hit on that sequence, and we're getting a continuation trade. So the 29 to the 40 was the trade, and a potential breakout here on these pullbacks. So as they pull back the price, we need to see for a turn and another attempt at that high. We break it, then we'll get to the 15, we'll get to the 70, 50 to 70 range. So we're seeing that, right? We're seeing that reversal, and now another attempt at that high. Just ultimately, a break above 45 will pick up steam and will take us to 50 and to the 70. It's consistent with the behavior of being long here. Where would that idea struggle? If you end up breaking 304, because that will swing that 200 NT Rinko down to being disconnected and out of harmony. Switch trade right here, and we are going to be seeing that expansion right now. Here comes, off you go, and hitting the 50s, and now we're contemplating the 60s and the 70s. Amazing how the market works, right? When you're singing along with the market. Now, only if I just kind of jump in that trade that I was talking about, right? But that's fine. I don't have to be in every trade. I just have to constantly be trading mentally and then translating those trades into live trades when I make the choice. Oh yeah, oh yeah, yeah. I mean, it's just as long as we're doing the right thing in the right place and seeing the market for what it actually is gonna do, that tells me that I am in sync, and that tells me that I do qualify to put capital in the markets. So if I keep making assumptions, and that's how I measure how I'm doing for the day, is not in am I up money or down money. That's not a factor. It is a factor, but it's just really not the biggest factor. The biggest factor is, hey, I made five assumptions about price action. How many of those five assumptions did they work? If I'm three out of five, well, guess what? I'm above 50%. I'm 60 something percent. Okay, I can put risk capital in the market. But if it's the opposite is happening, make five assumptions, three of them are not working or ended up getting stopped out mentally, then I need to spend more time with the market. I really do. They're gonna keep churning this bad boy up. All right, guys. So as obviously, I didn't miss much of anything here. I mean, it's just constant back and forth in a tight range around that 300 level, basically between the 350 and the 300. And things are slowing down, and we could see the price action is taking a while to actually make a 10-point move. And it's doing it with a long bias overall. So the dips are getting bought overall, and price action is slowing down. So if you find yourself up money, it's not a bad spot to call it a day. It's a Friday after all, and it's been a fairly hectic week, um, profitable week, but it was challenging. And if you find yourself down a little bit of money, don't try to push it in a market that looks like this. It's just a slow grind. You can take trades on the upside whenever you have a new transitional zone building up. Course of action, I like that. What is the course of action? I mean, I'll speak to NQ, and in NQ, ES is to follow. Uh, you on the 200 NT Rinko and the 100 both are in sync on the long side. So the trades are long. It's just we are extended about 250 points. So to establish a position here long is quite risky. But the market is not short either. So what has to happen in order for me to think in the short term, like as a trader who are looking to go short? I'm looking for a break below 269, which means ES needs to break almost below that oh 08, actually below the oh 06. If the market does that, then I would have a case and to start going short, and I have stops in the 10 to 16 level. So it's extended on the long side. So scalping trades would work better up here, and it's not quite short yet, and we're looking for that drop below uh, oh 06 on ES and below 67 on NQ, and that will trigger rallies to be short. And then you got this environment that we are in right now, which is agonizingly slow. I mean, market is meandering and is so distinctly different than the personality we had all week long, because it didn't matter what time of the day you are at, this market was hyperactive, moving all over the place. So the market is resting here, and the longs are in charge. So that those are the levels that I'm looking for, and that's the behavior that I'm more willing to take a risk on. So if the market, for example, kind of pulls back to like the 200 and then give me a one candle reversal, that's a good healthy pullback. I can get involved into the long in a serious way. The market up here, I will only take scalps on the long side. If the market breaks 67, which is in the oh 06 on ES, you may not necessarily want to go short. You may want to just let the market sell off, then take the long signal once the market reverses back up. So you got these different scenarios that the market can present in front of us, and that's the different behavior I would have to exhibit toward it. Make sense? Here you go. You got the 200 up, the 100 is up, and you got 50 is up, and you have run up to that high of that range. If we break above 64, yeah, you're going to get some momentum. 1052, we have All right, so this is kind of consistent with this just grinding price action higher. So the 200 and the 100 are in sync. They're pushing higher. They hit that target number three on uh, the 100 NT Rinko. So that's the target right there. They came in on and hit target number two, and we are on our way to target number three. I mean, ultimately, as long as we continue to protect these type of price structures, all the way to four. Target number three is 492 and a half. 492 and a half, right? So market needs to protect 290, 290 in order for this long to continue. And the fact that it's slow and continues to hold the prices at these levels tell me the magnitude of the support that the market has right now. Like they are taking in about just about any dip in the market. Yeah, but ultimately the market needs to protect that level right here, 290. But you see, remember this little dip when got close to that 65 by like a couple of points, and just ultimately reverse the whole structure. They do that, and that's just nothing but a trap. You know, like all the people that got short into that got rolled over, and we got to see what they want to do here. So it's almost 11 o'clock, right? So it's almost, we're done with our morning session. I'm going to call it a day. I'm not going to come back for the later session or the last 15 minutes of the algo trade that I typically will do. It's Friday. It's a good spot for me to just kind of call it a day. We're gonna end the day with one and done basically, and that's the one and done. We had one trade, two contracts. We made 1357, and these are the decision here. We got in at 838 and 38, and we spent basically 2 minutes in that trade with those two contracts. Things were moving fairly quickly around that time. We'll leave you with this. Always remember that precision in trading is a decision, and we don't make money in the market, we are money. At least that's what I tell myself every day. For the month, I'm up a little bit of money. Well, I mean, I'm up money. Let me see here. I had a good month so far. Let's see here. I showed that earlier. Those are the days from the beginning of the month, and up 79. That's where I'm at. Majority of them coming on the long side. Go figure. 67% on that against 28, about 61% here. 1.66 profit factor, about average on winning and losing trades about even. It's just the fact that I'm doing 63% is making the difference. And average time in the market 1.8, average trades of the day. I mean, that's just not lumped up together, but let's see here what else we can see. Well, that's that graph. That's the equity curve, daily net profit. So small profit, small, Then you get a couple of big day, small, small, small. Today is small. I mean, relatively speaking, over 1,000, but that's where we're at. Weekly, 2 weeks in the month, I guess. I mean, that was a big week, around 50, and we're about 30 grand for this week. So what's working? I mean, ultimately, I mean, it's not the amount of money, okay? Because there's people who are starting off new or working their account up. It's a function of a decision making process. It's again, precision is a decision. And speaking of precision, that was a precise trade right there. That's a switch trade, Yanis. That was a trade right there. Everything lined up, right? 61 to 75. So it's precise trades, precise decisions, emotional control, and a function of scaling. So you're starting off new. You're not going to take 5, 10 contracts of the regular contract because your account is not developed yet to do that. And also, you got to know the system and understand it. So you're starting with a couple of micros and you are getting the flow of things and how the market is moving and how to read the 200, the 100, and the 50 in relation to the 20, and how you see how to read the market. And as you develop that skill set, you are moving on to, a function of efficient execution. And while you're doing that, you're exercising emotional consistency and control. And once you get that under your belt and you're showing week after week profitability, you're moving on to scaling higher. And that's just the progression of successful trading. Look at that. That was it right there. That was an entry point, 200 and 100 in sync, and a rotation higher. A minimum, a scalp that got you 10 points, a rotation and a trigger trade for target number two, and now target number three in the sequence is 394. And uh, ES put a captain setup short and failed it with a switch trade, and now you're breaking up. So you never gotten down to that oh 06 on ES. Okay, so it's 11:05. It's Friday. You guys go enjoy yourself with your friends and family. Good job, everybody, and just keep working at the craft of trading. Again, remember, I keep saying it because I believe in it. Precision is always a decision in trading, and you do not make money. You are money. So that's the big one. Think about that one deeply. You don't make money. You are money. As far as signals, just really 200 and 100 and look for a new switch, new transitional zone. I mean, exactly like this. And look for a switch trade that just happens right at that spot. Captain setup switch trades are profitable. If you have a little bit more risk capital that you want to invest in, right when the 200 into Rinko flips, um, get aggressive in the buying process here in that rotation. So, for example, and that's what happened today for me because I only put on 2 contracts, and this could have been a huge trade too. But 143, and you got a dip, you buy into that dip, and you're looking for a close of 25 points from that entry, the initial entry or close of the prior candle, and you could just trace it 25 points at a time and keep your stop at that low, and you got huge potential here. So that's a higher risk trade, but a low risk trade that's revenue producing is The captain set up switch trades. You got the switch trades right at the inception of a new transitional zones. Those two things are high yielding for income. You build up your good account doing that. Any other questions before we adjourn? Yeah, Captain Switch is doing very well. All right, guys, that's it for me. I'm gonna start my lunch and get my weekend going. Uh, was a pleasure trading with you as always, and we will see you Monday morning. Have a good one. Welcome, Pat. Have a good one. If you have any questions, just let me know. Any friend of Gary is a friend of mine. I will take care of you.